Hello guys, so in this video we are going to be discussing how you can properly manage your risk trading the forex market and how you can equally apply that same risk management taking our trading signals in the group, right? Now when you come to your trading view like this, you locate the currency pair you want to trade. Now your analysis could be short or long. If your analysis is long like this one that you are seeing here in this screen, then you pick your long position to replace it. Now what you should notice is this: whatever the amount you are risking or you want to use to trade, there should be a potential amount or potential profit you are aiming to make. It's as simple as that. Now that will determine what the amount of pips that will be what available in those trade, in that profit or loss, right? Now if you pick your long position to like this trade that is currently on right now, right? Now when you pick it, you now click on that long position too. Now I want you to focus on that target and stop. The target is one at the top. The target, that green section, is one at the top. Now if you follow that green section, if you follow the line of that green section, that target, you're going to see 30.0. Then after it, you're now going to see amount. Now that 30.0 is what we call 30 pips. It is the pips in profit, like the percentage in profit of the amount you want to risk in the market, right? All right. So it means that you are risking 30 pips for the what? For you want to make 30 pips, right? That 30 pips is the amount, the potential amount you are going to make, the percentage amount in pips you are going to make, right? Now if you look below the stop, you can see the stop. The stop here, if you follow it, the red section, you're going to see 10.0. That 10.0 is the pips, is the amount in pips you are willing to lose, which is the one you are entering with. Okay, that risk you are entering in the market, 10.0, that is the pips. 10.0 is the pips. Let's say you're entering the market with $10, right? It means you are risking $10, which is 10 pips in the market, and your potential profit when the trade finally hits full take profit is 30 pips. It means if you're risking $10, you're expected to make $30 at the end of the trade. Now the same thing goes with any amount you are risking. It could be $100, $1,000. If you risk $1,000, that is if the trade start going against you and hit the extreme end of that red section, it means you have lost 10 pips of that trade. It also means you have lost that $1,000 as your risk because you use all of them to enter the market. Now if the trade finally goes in your favor and hit full take profit, which is the extreme end of the green section you are seeing above there, it means you are going to make times three of that amount you used to enter the market, which is what? $3,000, which is also 30 pips percentage in profit. That's that movement percentage in profit, right? Now if you have already actualized this thing, you can also see the risk to reward ratio at the middle, the green section at the middle. You're going to see risk to reward ratio, which is written as 3. The same thing with you risking 1 to make 3, risking 10 pips to make 30 pips, potential 30 pips. That's exactly what it means. So make sure you pay attention, right? This equally apply to any amount of in pips you are risking. It could be less than 10 pips as your risk, it could be higher than 10 pips as your risk, but just know that whatever you are risking, check the above to see how much that you expected, the expected amount in profit you are going to make in the market. Now let's continue. So after you have already understood all these things, now what else you need to do is you come to baby pips. Okay, baby pips is going to help you to know the lot size you are going to use for that trade, that is going to correlate with the amount of the risk you are risking in the market. Because if you don't understand the lot size, you are going to end up using any lot size that could be higher than the risk you want to risk, or even lesser than risk you want to risk. Do you understand? So that's the work of baby pips. So when you come to your Chrome like this, you type baby pips, okay? As I've seen it, babypips.com. Then when you type it, it brings out like this. Position size calculator is going to help you calculate the amount you are willing to lose based on the lot size, okay, for that trade. Now the currency account, of course, our own is always, or should I say, it's always on USD because of it is official currency for trading. But if your own is not like, it's not on USD, you can select any amount, any currency that your account is on default on, okay. So I will leave it on USD. Then you put the amount, the account balance, your total account balance you are seeing on what, on your MT5, okay. The amount you are seeing on your MT5, if it is $100, put it there. If it is $1,000, you put it there. All right. Now if you put $1,000, it means your total account balance in your MT5 is 1,000. If you put $100, it means your total account is what, $100, right? Now risk percentage means, out of this $1,000, how much are you willing to risk, to use to trade? Like, how much are you willing to use to trade? Which means even if you lose that amount, it's not a problem. You're not going to have any problem even if you lose that amount. All right. Now if you are comfortable losing the whole of $1,000, you put 100% of that $1,000. It means that even if you lose $1,000, you're not going to start panicking. You're not going to start, heart attack will not, get you understand. So but if you don't want to, if you know that you will be comfortable, okay, losing that $1,000, then you put the risk percentage of the what you want to risk. If you want to risk 10% of it, 10% of $1,000 is $100. That means you are trading with $100, but your total account balance is $1,000. You're only risking $100, which is 10% of $1,000. Is that understood? Now let's go. Now the stop loss pips is that particular pips, stop loss pips you have or you are seeing in your trading view, okay. Now if you come to your trading view, you tap on your positions, position 2. Now you see that 10.0, that stop loss pips 10.0 you are seeing below there, the one that shows red. Now that 10.0 is the stop loss pips, okay. That's the stop loss pip. That's the amount if the trade, finally hit your what, that extreme end, you are going to lose 10 pips. Now you put that 10 pips here, 10, okay. It means 10 pips. This is same as what, 10% of $1,000. It also means that you are losing $100. You are using $100 to trade, and if you lose, you are going to lose only $100, which is also 10 pips of what, your account. Now you select the currency pair. The currency pair we have there is NZD USD. You can see it, NZD US. You can see it below here, NZD USD, which is New Zealand dollar, okay. You select it, NZD USD. So where is NZD? You can see NZD USD. Click on it, then you click on calculate. Once you click on calculate, you are going to see the amount at risk, which is $100, as I've said before, $100, right? You can see the position size, which is 100,000 units, and you can see you are expected to use one standard lot size, not the mini lot, not the micro lot, or even the nano lot, okay. You are expected to use just one standard lot size. It means that this one standard lot size is same as that $100, as well as that 10 pips. Whatever your amount you are going to lose, you're not going to lose more than that or less than that, okay. The mini lot for this is just 10 lots, which you don't have any business with. That what you have business with is that standard lot size, okay. Now what you need to do after you have already known the lot size you are going to use is to head over to your what, MT5 account, okay. When you head over to your MT5 account, okay, as you can see, I'm currently on this trade buy, which is GBP USD. So you go to your quotes and you go to your plus sign at the top left hand side. You type NZD USD. then you click on that plus sign at beside it, then you go back, then you click on that NZD USD, you click on chart. So when you click on chart, it's going to bring out the chart, right? Now what are you expected to do here? Okay, you are expected to do what? You click on this, you don't click buy immediately, you don't click sell, except the trade is an instant execution. But if it's a limit order, okay, you click on this top right hand side. Okay, when you click on that second to last this thing, you click on it like this. Okay, when you click on it, then you now, as a limit, if it's a buy limit order, you put it like something like this, right? Sorry, put it something like this, right? Now you put your SL here, you put your stop loss here, but then again, this is unspecific and unrealistic way of setting your stop loss and take profit. Why? Because if you do it like this, it's just you guessing. It will not give you the actual result or actual numbers you have already calculated using baby pips, which is expected you to use one standard lot size. So what are you expected to do? You click on this arrow beside the TP. So when you click on it, then it's already on one standard lot size. Now what you should put here is the limit price. If it's a limit price, okay, unless if it's your market you want to buy instantly, then you don't need to put all these things. You just go ahead and buy immediately, provided the fact you have calculated what you expected to lose and what you expected to make, right? Now this here is your SL, stop loss, right? Now when you click on, you can see your SL here is 0.59962. That is your SL, stop loss. Okay, we put it 0.59962. Your take profit level here is what? Your take profit level here is 0.6362. Okay, 0. What? 6362. Now what are you to do? You now click placed. Okay, market is closed because I'm doing this video on Saturday. All right, so that's why it cannot go. All right, so that's why it cannot go. I'm doing this video on Saturday, right? Now immediately you place the trade like that, you are going to come and see exactly what you risk. Okay, you're going to come and see exactly what you risk. You're going to be seeing it here. When you tap on it, you're going to see, or you go to trade session, you're going to also see it. Okay, let's say I choose maybe Bitcoin, because today is Saturday. Maybe I choose Bitcoin BTC USD. Okay, choose Bitcoin BTC USD, right? Okay, so as you can see, Bitcoin USD is still on. So let's say you use Bitcoin USD, which is a BTC USD. You put limit order, you put SL, you put stop loss, something like this. But then before you do this, you go to your trading view and you select BTC USD. Okay, once you select BTC USD, all right, now you now place your limit order. Let's use the same method we use on AZD card. Okay, let's use it as 10 pips, and this to reward is just 3. Let's use 3. Okay, 3 as 3 pips and all of the stuff, right? Exactly. Good. So this is 3, this reward is 3. It means whatever I'm risking here, I'm expected to make, times 3 of it. Now let's go to here and we put our SL limit order, SL and everything. Remember, this is not a valid trade. I'm just using this to show you guys how to do this. Okay, you put it, now you go click on that arrow. You now, it's still on one standard lot size. The entry price here is 117,407.7. Okay, that's the entry price. okay, 117,407, 406 point what, 406.7. okay. Now the stop loss here is what, 116,939.5, 116,9 116,939.5, right? That is the stop loss. And the take profit is 118,807.2. okay, 118,807.2, right? That is what, the take profit level. Now you click place. It is placed already. Why? Because this is Bitcoin and the market is always open for Bitcoin, for crypto. But if it's forex currency pairs, it is not tradable on Saturdays, which is weekend. Now if you click on it, if when you tap on that buy limit, you are going to see that this is amount you are risking 467.20, and you're expected to make one 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 thousand 400.50 USD, which is $1,400. Now if you divide it by three, if you divide this if you divide this one four by three, okay, let's divide it by three. Let's use calculator. Now if you divide one four divided by three, is going to give you 466, okay, which is equivalent or equal to this. I can see it, which is equivalent to or equal to your stop loss. So it means that you are risking 467, okay. You are risking 467. Remember this 467, the $1.2 there is just because of the spread and all of those stuffs, because of the spread, right? So this is exactly how to calculate it. Very, very important. If this video is helpful to you and you are watching it from my YouTube channel, don't forget to like, share, and follow for more content like this. Okay, you can also subscribe to this YouTube channel for more of it. As it, remember how we started about it and the process you need to take before you can be able to, which is not, it's not that stressful. It's very, very easy. The reason why this video is too long like that is for me to take my time to digest it for you to understand, even if you are a common beginner or a just a novice. Okay, I won't call you a novice because you know something, but you just have no knowledge about it. It can help you, okay, to understand it better. Don't forget to subscribe to this YouTube channel, and I'm going to see you on this side.